Cryptocurrency YouTube usually is sort of the first line of defense for new people coming into the space and learning about cryptocurrency. From your POV, what are some of the top 3 mistakes new cryptocurrency investors should avoid?
Yeah, I would say the number one mistake that a lot of people, participate in, I guess you can say, or make, is not understanding what they're investing in. And I think that, it's very easy when you come into the top of a bull market to make money on anything. We know that. But all those people that are making the money at the top, they're going to lose all the money because they don't understand what they're investing in. They don't understand the long-term potential. They don't understand the difference between, Safe Moon and, Ethereum. Like, they're just, to them, it's just something somebody told me to put money in. So you have to understand what you're investing in. That's number one. And number two, I would say getting lost in between the euphoria and the depression, because right now we're in euphoria. I mean, we're not technically yet, right? But everybody's excited. People are making money. Like, things are great. In the bear market, it will be like depression. And when you get caught in between those two emotions, it affects what you're doing. And so at the top of the market, you're putting money into stupid stuff you've never heard of, just trying to, whatever. And you're talking about, oh, I'm going to be a millionaire in 3 months. In the bear market, you're looking at an Ethereum that's $80 and you're saying, oh God, it's overvalued. Like, oh, this is so terrible. Like, imagine like getting, a 40X or whatever it is approximately if you would have bought Ethereum when I think it went down to $79 or something at the low point after the March crash. So the thing is you really have to understand the weight that your emotions have on you in investing. I mean, really, that's what charts are. Charts are 100% psychology. That's only tracking human behavior and its tendencies to buy or sell based upon the value of an asset going up or down. I mean, that's what charts are. So those would be the two things. Then the number three thing I would say is just not taking profits. Understand, like, I'm taking profits now, a significant amount. I mean, we bought a new building, so we pull money out to do that. That's a tangible asset in real life that I have now that won't be going away. So taking profits along the way when you're making money, like, greed takes over people. You just say, like, they always say, like, you have two different types of people, when they start making a lot of money. Like, one person, they will be more like, I want all the money and I'm going to take all the money and I'm going to keep it all to myself. And they're going to become very, like, miserly and stingy and whatever. And then you got other people that you start making a lot of money, you start looking at, like, how you can help people and how you can, how you can grow your wealth. But it's not like, where it's all you think about. And I think that for the people that get really stingy, they get way too greedy with things. And I think, like, as long as you're able to take your profits and help people or help your family or whatever the case may be, you're going to be in a good spot. When you start getting to a point where you want to keep every single penny, every single dime for yourself, you stop taking profits because you just think, oh, well, if I take, 5% out here, eventually that could grow into much, much more down the road. And that's how people get, that go from being worth nothing to $1 million in a year and then back to nothing in a year. So I would say you definitely want to take profits along the way, whether it's a few percent. Just use common sense. If you have a coin that goes up 300 or 400%, that's incredible money. Like, you'll never make that in the stock market. You'd have to compound your gains on the stock market for like 20 years to be able to get returns like that, I guess. I mean, I invest in Coinbase, that stock, Peloton, that's another one I have. And like, it might be able to double in price in 5 years, I was told. So, like, we're so lucky in cryptocurrency that we have these kind of life-changing gains that we can get. You got to understand that market cycle. I mean, that's kind of part of being educated and understanding the emotions. But the number one most important thing to learn in crypto is the market cycles. And that's how we all have been able to predict these price rises. Like, our numbers may not be the exact same, but we all knew this was coming. It's because we understand the history. So understanding the history, getting educated, learning to take profits, and not getting caught in the emotions of the market, I think, are the key ways that you're going to be able to do well in cryptocurrency.
Yes, great perspective. To watch the full conversation, there's a link down below in the video description. And if you're interested in learning more about cryptocurrency, click subscribe. You do not want to miss a daily video. See you tomorrow.